So here we go again, guys. Thank you guys for watching. I'm the host of the channel, Albert. We're going to continue the banking sector stocks. So again, we have another list of about 15. I'm going to be using Webull. And let's begin. Let's just jump right into it. We're going to review these companies one by one. And I hope we can find some good stocks here. So let's look at the continuation. So we have now, let me just move my camera. So here we go. Fundamental analysis and a little bit of technical. PGC, nice. So it looks like it's going on an uptrend. It's slightly flat, but it's sort of peaking slightly up, which is good. That's exactly what you want to see on an uptrend. Like that slow growth, just slightly going up. You don't really want to see like this. That is just like, that kind of line is just scary because that's not, that's not really normal. So earnings, pretty good. Dividends, not too bad. Looks like they're paying quarterly. Now let's look at the analysis here. Let's look at the charting for this again. It's almost looking like it's breaking the resistance. Hopefully it does. So let's look at the financials for this stock. We have it here for, let's see. I think something's wrong with the, let me open it again. So there we go. Had a PGC. Let me delete this. There you go. So we have PGC. Finance details. Let's look at that. Looks like they've been beating estimates. Margins, nothing. I don't have. I'm not surprised of the debt. Let's look at the income statement. Went down in 2020, higher in 2021. So let's look at the dividends. They're paying the same amount of dividends. Not rising. I'd stay away from this stock. Just because they're not paying rising dividends. The share price ain't too bad and the gain ain't too bad, but yeah, if you're gonna buy this stock and you know you're getting the dividend, you can just find better ones out there. So I'm gonna have to pass on that one. It needs work. It has work to do. So the next one up, AOMR, Angel Oak Mortgage. It looks like they cut the dividend, unless I could be wrong. They pay twice a year. As you can see, the technicals for this. It looks like it was going flat here, then it actually broke down and then kind of went down and up and then flat again. But again, this is all between a $2 or not even, barely even like a $3 difference from this line to here. So yeah, it sucks. That's not a good gain for capital gains. That is why, again, I keep stressing it. You just don't look at the dividend yield. You got to look at how much they gained over the year. Because it's like, if you buy it for the dividend, it's like you might end up losing money because you bought that dividend. It's like, if you ever plan on selling it, at least get a really good gain. I don't mean like $1 or $2 gain. I mean, get several, several bucks in, You want to get more money than what you paid for. That's pretty much the goal. Yeah, dividends are nice, but there's so many. There are so many dividend stocks, it's not even funny. Like literally, it doesn't have to be like a bad company for you to choose it just based on its dividend and its high yield. Like there's so many better companies with better offers, and you just can't go for the first one that you see or the most popular ones. I can't stress that enough. Look at the debt. That's not too bad compared to other banking stocks. So let's look at the dividend. Let's see if they have. So it looks like they just started paying a dividend. That's not bad. They had a good raise. That's a 24-cent raise. So it looks like they're doing pretty good. They have not had any splits. This is my concern. Their earnings are less than their dividend. So I don't know if eventually their earnings can cover the dividend. That's what's gonna worry me. Even if they do have a strong cash flow, let's see. It's kind of scary. That's good that their debt is low, but I don't have anything for 2021. So now let's look at their balance sheet. Their balance sheet is really good, like I said, because they're low debt. But then, okay, 34 million, negative 52, 54 million, 80 million. I'm trying to think how many shares. And then on top of that, I don't know, to be honest. I wonder what's their market cap? 433 million. I can't even do the math in my head. But I would watch list it. This is not a bad company. I would definitely watch list. Watch list, guys. Watch list this company. I like that it has low debt. It just happens to be that the yield is high. Their earnings are not too bad. Their earnings are not too bad, but again, I said that their earnings kind of worry me a little bit because I don't know if they might not cover the dividend. It looks like they just started paying a dividend. We're gonna see in 2022 how many times they pay a dividend. If they pay it twice a year or 4 times a year. Usually it's 4 times a year. But again, that scares me. That scares me a little bit. The earnings not being able to match the dividend. Next up I have is Penny Mac Financial Services, PFSI. As you can see, a lot of chop here in the technicals. Chop, went up, down, up, down, there. That's a lot of chop. And as you can see, the past month. So what kind of, I don't care about percentage, because some people always say, oh yeah, 100%, 38%, 25%. That I don't really care about. This is what the ultimate goal is. You want to look at this. So we have here about this line and as high as this line. Okay, so what is the difference between these two lines? Let's see what is the difference between these two lines. Just try to get comfortable again. Okay, so from here to here, okay, that's exactly what I'm going to show. So we have here about 56.50. Let's round that off. Then we have about here, Come on, there it is. So we have about 56.50, around 70.50. So we're talking about less than $20 difference. That's not bad. That is definitely not bad. So let's look at the analysis. Oh, wow, it did break. What price range are we talking about? So it did break the 66 mark, but then it went back down to 58. So the price range is falling into a wedge. So the price range that you guys need to worry about is about $66. That's the price range, guys. That's what I have on Webull. So we have here, let's look at the annual. So we have here dividends are not bad. The dividends are not bad. Those raises are nice compared to a bunch of other stocks for the banking sector. I would say watch list. This is definitely, yes, a watch list. Definitely a watch list. Definitely. Good volume too. Yeah, definitely a watch list company. Next up that I have is HDB. HDB, yes sir, that's what I have. HDFC Bank. It's on a downtrend. Whoa, these dividends are pretty close to each other. I paid 21 cents. I paid 26. So let's look at the volume. Not bad. That's good. Earnings per share. All right, dividends nice. Share price not too low and pretty not too high either. Analysis. It's in a wedge. I can see that. Let me see what is the. It is under the 200 moving average, which is right here on that brown line that I set. So it is under. So we're about 69 bucks. The 200 moving average is about $72. So we're like $4 off below the 52. Sorry. Yeah, $4 below. And I said 52. I was gonna say 52-week high, but sorry, it's a little bit above the 52-week low. Just a few bucks as of right now. $7. So what about the dividends? Whoa, okay, this company has paid 21-cent dividend. They paid 3 times in 2019. Any splits? No. This is an ADR, so this company is overseas. Where are they located? Where are they lending money from? Doesn't say. Well, that could always be looked elsewhere at another time. So I would say watch list it. Some reason all of a sudden now we have good stocks. Watch list this one. HTB. Next up I have PFHD. Company's called Professional. They don't pay a dividend. Okay, earnings per share. Let's see. If they are. Let's see here. Another watch list company. Looks like it. So let's see if they have. Okay, net income, revenue, cash flow. I'd say watch listed too. It's a growing company. Yeah, I'd say watch listed as well. So next up that I have is, stand up, my back hurts a little bit. I'll just stand up and do this. So we did PFHD. Next one up is CGBP. CGBP. Why is it not showing up? That's weird. CGBP. CGBP. It could have been CGBD. CGBD? I wrote down P, but I don't know, it could be D. Could be wrong. But anyways, yeah, it looks like a D. I thought it was a P, but it's a D. This stock actually used to be not an ETF. It used to be a closed-end fund. So now I guess it's an ETF. So the dividends, this is all different. So this is actually a fund. It's not even a stock anymore. So I can't really review this. I can't really see what's what. I can't see no financial data. The stock looks flat. So I say stay away from it because I can't even view anything. I'll have to review this another time and look at it another time. So next up I have CSTR, Capstar Financial. It was going up. Earnings per share, dividend. So we have earnings per share at 2.1. I'm not too crazy about the stock price. And you see this 52-week high and low, $7 difference. Sorry, $9 difference. It's kind of iffy, only for a $9 difference throughout the year that they earned. Now, if we look at the estimates, looks like they're growing pretty good. That's not bad. Where is the balance sheet? Show me the balance sheet. Okay, that's not bad. Cash flow. 422, 270. Seem like they have decent cash flow. They're beating estimates. So we have low volume. Earnings ain't too bad. Let's look at the 5-year. Still looking flat. But again, they've gained so much momentum from 2020. So that's good. I'd say watch list it. Definitely say watch list it. Funny how this video is a bunch of watch listed stocks, but then in the last one, there were a lot of duds. Next one up is KB. KB Financial. We have here Korean-based company. Let's look at the chart real quick. $50 a share. That's the 5-year. Now let's look at the 1 year. So it's gone up, then down, up, then down, then flat. Right there, it's going to gain a little bit, but that's something, but not too much. So we look at the analysis on the chart. Yeah, it's in a wedge. It's not too bad. The company's not too bad. It looks like they cut their dividend from there to there. And then from here on up, it looks like they've raised. Only here they've gone down 2 cents. But all the way here they've gone up, raising their dividends. I mean, here was a little drop too. 10 cents drop. So they only pay once a year. Let's see if they have any splits. No splits. I definitely add to the watch list. Keep your eye on this company. It seems pretty good. Next up I have is Maine. I think I've reviewed this company so many times. Monthly dividend payer. They're not really a bank. They act as a bank. They're monthly dividend payer. But I will say this. They slashed their dividend in December of last year. So once I see a slash, I'd stay away from it. Because you don't really know why would they keep slashing further if they tend to. It's still a good company, don't get me wrong. If you like the monthly dividends, go ahead. That's not up to me, that's up to you. I have no part in anybody's decision making. Again, I'm just showing you reviews because these are the evaluations that I believe that are good and bad. But I think it's lost its touch lately. I'd stay away from Maine. I think there are better companies out there now. Things are changing fast. Again, Maine used to be really, really good a few years ago. Now it's like totally different. Their finance is still pretty good, but it's just their dividend payments. As an income stock, it's okay. They're better ones. Again, they still have good financing principles and core values and all that. So I wouldn't count them out. So what I'm saying is, for income, they're okay, but I think they're better ones. If you're looking for them as growth, I'd say no. Don't. This is not a growth stock. If you're looking for a dividend growing payer and a monthly payer, I guess whatever, you can go for it, but I wouldn't go for it. But as for again dividend growing income, no, I wouldn't suggest it. But I guess people just want that stable income right away. They say, "Oh yeah, the monthly income." But to be honest, all you really have to do is find stocks, 3 different stocks that pay in different months. You just have to find stocks that pay January, February, and March. So that way, each quarter, the one that pays in January, the next time they're gonna pay in April. So you just have that rotation every 3 months for that stock. I don't know why people make it so difficult. Oh yeah, I want the monthly income when you could again, all you have to do is find 3 different stocks that pay different months and you collect the monthly income regardless. But I don't know, people just want the easy way out. I don't do the easy way out cuz sometimes the easier way out is not the best way out. So that's just what it is. Investing is not meant to be easy. But again, once you go through a process and you know these names and you know these stocks, it becomes easy to you. So let's look at the chart. We have only like 3 or 4 more. I'll try to hurry this up. So we have this one, BWFG. See the drop went up again. The 1 year, it's above the 200 moving average. We have quarterly payments for the dividends, 18 cents there. Earnings have been reported close to their dividend paying date. So now let's look at the analysis. So we have there decent numbers, not bad. It's on an uptrend. That looks nice. Like I said before, the volume is low right now because stock market is closed. Not bad. I definitely watch list this stock. Really nice stock. Got some good stocks in this video. So next one up I have is CATC, Cambridge Bank Corp. You can see it's gotten flat, then gone up. Pretty much flat. Not too flat. It's gone down a little bit, like right there. But for the most part, I can fairly say it's pretty flat. Share price, not too expensive and not too cheap, which is good. I like that. Earnings, whoa, those are high earnings. You really, again, I've gone through this video, past videos, banking sector. That is a high number to see. So they are definitely doing something right. Uh, Again, that's rare. You don't really see high numbers in that. Typically, you see numbers 1 through 3. Anything greater than 3, you know these guys are earning pretty good money and they're doing something right. So they can definitely afford to give raising dividends. See if they had any splits. No splits. Another one, definitely watch list. Definitely watch list. Watch list. Definitely. This is a good stock. Definitely a good stock. So we have here, let's look at the annual. So I do have 2021 results. Earnings are great. Look, the debt is pretty high, but that's pretty typical in the banking sector. Again, definitely watch list this stock. Looks pretty good in my book. Next one up, MFIN, MFIN, Medallion Financial. Not paying a dividend, that's okay. Even though this is low, I'm looking at this. That's, like I said, 1 through 3 in the last stock that I looked at. This is pretty low. I do not like that. I do not like that PE. Wall Street doesn't seem to like it. The stock here is pretty gone down. So it looks like it's going down. That sucks because this is really good. This may be a very undervalued stock. It's tricky, you know. I know this drop has went down, then it's gone up again. Wow. January 2022 has been a bad month. So, very, very tricky. Let's look at the analysis for the chart if they have any. So, it needs to break out of, let's say, like right there. In my book, it will have to break out of 850. But for the resistance line, we're talking about 880. So I'm off a little bit, but it's still close enough. In my opinion, I'm only 30 cents off. Again, I would think 850. So let's look at the debt at 82. I would still watch list it. You just never know. It's on an uptrend, but you never know. This might be a very undervalued stock as of right now. They're still earning pretty good. So I only have 2 more and then we are done with this video. I can't believe so many good stocks. So many good stocks. I'm just going in the order of how I have my list. Again, this is not alphabetically organized. I don't have this in share prices. Again, I'm doing this by sector. So, I mean, 700 stocks, it's hard to put that in an order. This is like, you know, down the list of all the banking stocks that I have. So, again, I apologize if it's not in this order, but again, I'm doing the sector. Again, wow, this is insane. Insane. This PE ratio is really low. That tells me it's undervalued. Very, very undervalued. This is very high. And this is very low. That tells me it's very undervalued at $20 a share. Now let's look at the 52-week high. $5 difference. Again, you almost never see stocks in general, and I'm talking about in general. You never rarely see stocks that earnings per share are more than 3. So to earn 18, that's an insane amount. Now let's look at the analysis. Let's go back to the chart, actually. Point something out. It went up, went down. To me, it looks flat. It looks flat. Come on, draw the line. It looks flat to me there. It looks flat. That's what I see. When I draw these lines, that's what I see. I know there's little ups and downs here, but for the overall picture, I look at the trend. Again, I see up. This is what I see, and then it looks flat. That's what I see. So we look at the analysis in this one for Webull. Their resistance line, their resistance price as of right now, we're talking about 2150. So let's look at the 200. Let's look at that. $19.80. They're well above the 200 moving average. And again, $21.50. So they're about $1 away. They're about $1 away from the resistance line. Definitely watch list this company. Very good company. Watch list it. Last but not least, HTBI Home Trust. We have here 1 year. Nice uptrend. Looking flat. Went up again. Went flat. Not bad. So overall, in an uptrend. Overall. Should have continued. Overall in an uptrend. So we have here earnings per share. Not bad. Dividends. Volume. I'm looking at everything else for a minute. Everything else seems to check out. Seems like a good stock. Let's go to the analysis. If I'm going too fast, I apologize. Trying to do this in a quick review, but it's still pretty accurate. The price for the breakout they have on Webull is at 32, I would say. $32. You see it on that green line. So we have here for the 2021 results. Net income has dropped. It's not good. That is not good. Debt. Okay. Let's look at their dividends. Rising dividends. It's not bad. I've seen better raises. I'd say no. Because of that net income. And usually I don't go for high debt. These are just rare companies that, every now and then banks can take on a lot of debt. That's just the way they work. They just have that advantage to do that. But other than that, yeah. So that's the last company that I have. I hope you guys enjoyed the review. I know this video was long. Thank you guys who stayed to the end to watch this. If you liked it, subscribe. I'll post all the ticker symbols in the description below. I've showed a bunch of good stock picks. I hope you guys liked it. I'm going to continue the banking sector. I hope you guys enjoyed the show, the channel, learn a thing or two. And I'll see you guys in the next one. Thank you guys for watching. Stay safe and have a good weekend.